everyone, my name is Bret Mooney and welcome back to Mooney Talks Money. Today I'm going to be focusing on the return of student loan payments, some things to consider as you go to do that, and some potential ideas to help you pay down that debt a little bit more efficiently. Some things I wanted to point out is, first thing is roughly about 43 million people in the United States owe a collective $1.6 trillion in student loan debt nationwide. So for an average per borrower case, and the average monthly payment is right around $300 a month on the minimum payment per borrower in the United States. Payments do resume this month, October of 2023, and interest started to accumulate last month in September. Two things that I wanted to make sure you guys were aware of, and some things to look at as you go to pay these payments again. The first thing is your loan servicer may have changed, right? So who you were paying your student loan debt with a couple of years ago, when you were paying the minimum payment a few years back, that may have changed, and you may be paying those payments through a different loan servicer now. So that's something to double check. The other thing I wanted to point out is for those of you who are on income-driven payments, your income could be different or most likely higher now than it was a few years ago when you were paying off the minimum payment back in 2020. That payment amount could be higher today than it was when you originally started paying off those debts. So that's something to double check as well. Two things that you should consider as you go to start to pay these payments, and some ideas for additional assistance. Many times people don't even know this, but some employers do allow student loan debt assistance, and it's actually a tax favorable thing for them to provide that type of benefit. So it's worth double checking, and your employer may be able to provide up to $5,250 of a tax-free student loan repayment for you. So that's something to double check to see if that's something your employer provides. The second thing is that starting in 2024, under the Secure Act 2.0, employers can start to match student loan payments with retirement contributions. So yes, if you are paying off your student loan debt, say it's $100 a month or $200 a month, your employer does have the ability to match your retirement plan at work or your 401k in accordance with those debt repayments. So something to consider to see if that's something that your employer is going to get implemented in 2024. And you may want to ask some further questions there as to the structure of that, and if that's something your employer is going to provide for you. Thanks for tuning in, and feel free to leave a comment below for future topics you may be interested in. Thanks.